There's a very famous quote about trading and investing, and that quote is time in the market beats timing the market. Now, think about that. Time in the market beats timing the market. That quote was originally from Kenneth Fisher, but you hear this all the time if you hang around any trading or investing communities, and it makes sense when you think about it. How do you make large sums of money when it comes to trading and investing? Well, the more time you spend at it, the more money you make. You kind of understand that. How did somebody like Warren Buffett become so wealthy? Well, the reason he's so wealthy is because he has spent so many decades in the market, right? He bought shares of Coca-Cola like, I don't know, 40 years ago or something, right? He bought shares of Apple decades ago, right? He's been sitting on shares of some of these companies for 30, 40, 50 years in some cases, right? And he's just been in the game for a long time, right? Warren Buffett is in his 90s, but he started trading and investing in a big way, when he was a much younger man. And that was naturally how he became wealthy. He's not some genius trader. He's not super smart. He's not super lucky, right? He bought shares of some very big, important companies, and he held those shares for a long, long time. And we know this is the trick with long-term passive investments, right? You buy shares of a market ETF or an index fund. You buy shares of SPY or QQQ or a mixture of several market ETFs, and you just sit on it for 10, 20, 30, 40 years in some cases. And you can turn a small sum of money into many millions of dollars in some cases if you sit on it long enough. So that's the trick, right? Time in the market beats timing the market. A lot of traders mistakenly think that they have to make the occasional good trade. They have to hit a home run. They have to time something perfect and basically hit a lottery ticket kind of play. Hit the jackpot. That's the only way to become wealthy trading and investing. And that's not the secret at all. The secret is to get in the game, play the game in a responsible manner, and stay in the game for the long term. When we're talking about options trading, we know that, for example, selling puts on products like SPY and QQQ, the ES futures, the market products, right? Selling puts on that stuff is a fantastic strategy, or selling put spreads on that stuff is a fantastic strategy, right? We know that stuff has positive expectancy. So all you need to do is make sure you trade small, you trade in a responsible way, don't trade too big, don't take too much risk, but as long as you do the thing over and over and over again for a number of years, or in some cases a number of decades, you're going to make a large sum of money in the end. That really is the trick. Time in the market beats timing the market. Food for thought, guys. Peace.